In our conversations with clients, we're always interested in hearing from them about the types of products they'd like to see from us. Most recently, they've expressed interest in products that offer three main attributes. First is the ability to pursue enhanced risk-adjusted returns over time. Second, rules-based portfolios that draw on the research and insights of an active manager. And third, they wanted it delivered in an ETF wrapper. So in response to their input, we conducted in-house research and drew on the firm's in-depth quantitative research to develop our 4 LibertyQ strategic beta ETFs. 3 of these ETFs track proprietary indices constructed from a deliberate combination of well-established performance attributes that together seek to deliver returns similar to the broader market, but with less risk. And they include global equity, emerging markets, and international equity hedge ETFs. We believe they'll fit very nicely into a client's core portfolio. Our 4th ETF is more income-focused. It's our global dividend ETF, and it seeks to invest in stocks that have a history of paying high and persistent dividends. We believe there are 2 unique features that could make a meaningful difference in helping drive long-term risk-adjusted returns. First, we've assigned strategic weights to the 4 factors we use to evaluate stocks. And second, we've defined the 4 factors differently from others in the marketplace. On the first, our research shows that 4 factors, quality, value, momentum, and low volatility, have provided a return premium above market indices over the long term. From there, it becomes a matter of deciding how heavily to weight these factors to pursue the desired outcome. As fundamental managers, Franklin Templeton believes that not all factors are created equal, and that factor weighting should be rooted in economic rationale. And as a result, we weight quality and value most heavily. For the 3 core portfolios, the factor weights are 50% quality, 30% value, 10% momentum, and 10% low volatility. The second difference relates to how we measure each factor. We consider multiple characteristics because we believe it yields a more comprehensive and nuanced evaluation of each stock. For example, to calculate a stock's exposure to the quality factor, we look at its return on equity ratio, its cash return on assets, and 3 measures of leverage. This tells us about the stability of the company's earnings, the strength of their balance sheet, and the effectiveness of how they use assets. We believe these differences are important in gauging how a stock could perform going forward. And when applied over time, we also believe our methodology has the potential to produce better risk-adjusted returns than the market. Franklin LibertyQ ETFs apply a rules-based methodology that reflects our philosophy as an active fundamental manager. We're now very pleased to make them available to all investors. Thank you.